Hey everyone, so I wanted to make a video on the power of 5R, what it is, and how we can use it to manage risk. This has always kind of been my message to everyone, and I feel like some people took the message a little bit wrong, and I just kind of want to show you exactly what it is and how it works. For the sake of this video, we're going to say that we are using a $10,000 US account. The risk being used is 1% per trade. So everything that we do today in this video will be a $10,000 account with a 1% risk. And I want to show you how to differentiate with where you should close with 5Rs, where you can leave runners, and what is the criteria ultimately to use this. And before we get going, I just want to say I'm not going to break down every single trade to the last detail. This isn't the purpose of the video. The purpose of the video is to teach you a little bit of management, a little bit of emotion control, and some people don't have a management plan or how they're going to get paid. So the purpose of this video is to teach you that. This has always been my message. If you don't like paying yourself every 5R, you can change this number to 4R, pay yourself every 4R or every 3R. Like I said, this has always been my message. I've always believed in this, and I actually believe in this so much. I'm going to put this out to our community. It'll be going on IGTV. It'll be going on YouTube. I believe this is something everyone should have access to because it's a really good technique. So we're going to use super simple numbers. So this is a 5R trade here. What it is a 2-pip stop and a 10-pip run. If we lose this trade, we're going to lose $100. If we win this trade, we're going to make $500. And it'll all make sense when I break it down for you guys. So this is potentially a $500 trade. The next we have here is a 10R trade. So if you win this trade, it is a $1,000 trade, or 10%. Again, like I said, we're going to use the picture perfect $10,000 accounts because it's just an easy number to work with. Next, we have a 15R trade, which would be $1,500 gain, or 15% if you held full volume to the end. So $1,500. Perfect. Now we have the, this should be 20R. I know what happened. Alright, so that'll be the 20R trade, and the 20R trade ultimately will be 20% of your account if you're risking 1%. So this is a $2,000 trade. Cool. Now, these are all hypothetically great numbers, great R's, but the market isn't always going to give them to us. So what is a way of securing profits? What is your plan, and how do we use this? So this would be a 25% trade or a $2,500 trade if you held the full volume. Now, we've all been in the market enough to know that you are not going to consistently nail off 25R trades. And if you are looking for 25R trades as a baseline, you're going to have a very low hit rate, and it's going to be really hard on your psychology. So what do? We focus on small attainable gains, 5R, 10R, 15R, and no, not holding full volume, taking partials. Now, let's assume we are in a bearish trend. In this scenario, you have one of two choices. You could hard TP at 5R, take your 5% or $500, and you can maybe look for another entry. Totally legit, nothing wrong with it. I used to do it forever when I first got profitable with smart money. It is a great emotionless management technique. Now, as you get into your 10-hour, 15-hour, 20 hours, 25-hour trades, you're not going to be holding full volume. So what does management look like then? So this is what I do, and I'm also going to show you one other day after this example and also explain today's trade, which was a 14-hour, and I'll show you guys how I managed it. So this is what we have here. At 5R, I would take 50% of my position size off. Now, what that does is we're going to take 50% off at 5R. 5R is a 5% gain. And if we're taking half of that, we're looking at a $250 secured. You're obviously break even at this point. And then what I do from this point on is we partial load 50% of our lot size here for a $250 secured, or 2.5%, however you want to look at it. Now we have a total of 50% left. And the way I manage it is I would take 20% at 10R and then partial out 10% here and 10% here, and ultimately at 25R I just close the trade fully. It's just not worth holding them. I can just get into another trade. So what does that look like? Let's say we took 20% of our original lot size off at 10R. So that would be another $200 gain. Cool. Now, a lot of you are just like, well, you're leaving so much money on the table, or you could just 5R hard TP, take your $500. Like I said, absolutely nothing wrong with it. This is just something to give you guys a perspective of what it actually is and how it works. So this is 15R now. At this point, we have 30% volume left. If we partial out another 10% volume at 15R, you are going to get another 1.5%, or another $150. At 20R, we now have 20% volume left, and ultimately what you have here is 10% of your 20% gain, which is another $200. The next thing you have is a 10% runner left on, which at 25R I just close out. If I do hold past 25R, it's usually, like 5% or something. I don't really hold a lot of volume at that point, because like I said, I can just get into another trade. But 10% of the remainder of your trade is an additional $250. So, if you just closed at 5R, you would have $500. If you held to 10R without taking any profit, you would get $1,000. However, there is no guarantee that it's going to make it to 10R, even pro trend. Sometimes the market does something like this and then goes. So this is where the power of 5R comes in, where we're always securing profits. So the market goes 5R, we secured $250 or 2.5%. The market goes 10R, we secured another $200. At this point, you are at $450 or 4.5%. The market now goes to 15R. You just secured another $150, which adds on another 1.5%, which gives you a total of $600. At 20R, you take another $200 off, or another 2%. You're now at $800. And let's say it does hit your 25R and you completely close the trade out. What you have at this point is a $1,050 trade. So if we just add all this up, that'll work. Okay, so hypothetically speaking, this would be $1,050. Now, a lot of people get greedy and think they're leaving all this money on the table. You're not. You're not. I promise you, you're not. The reason being is so many times in the market, what I showed you guys earlier, the market will go your 10R, but what it'll do is something like this, and then reverse, and then go, and then reverse, and then go, and you don't know how big these pullbacks are going to be. Even if you get the trend direction right, depending on where your entry is and whatnot, it is always good to secure profits. Now, with this method here, let's say you could hard TP at 5R, take your 5%, $500, look for another trade. This is the highest probability of a trade landing. It's the smallest amount of R's. Now let's hypothetically say you're in a pro-trend trade here, and rather than just taking 5 R's, you're going to try partials and you're going to try for the 25R. Well, what does that look like? Well, let's say the market hypothetically did this, and then it reversed and hit your break even here. Well, now rather than making 5% or $500, you actually ended up taking $600 out of the market. So now you made an extra percent or an extra $100. It may not seem like a lot, but a lot of us have funded accounts. A lot of you are going to be going for funded accounts. So now think that percentage over a bigger account and over the course of your trading career. Well, suddenly this extra percent that you got here adds up. Now, on the flip side of things, it could do this and reverse, and you're going to be really mad because you made half as much as you could. That does happen all the time, but then the next trade might make a 20R in reverse, and it makes up for this. So this is a management technique I like to use. Now, I'm going to show you guys what I did with today's trade. So we're bullish here on this, this particular trade. Whoops. So what I ended up doing was I entered on pretty much where our divergence showed up and around MA and momentum lines cross. So right here, this to me is obviously the cause of this 1 minute supply failing. So I ended up putting an order on this, which tapped me in, it kept me in, it was really great. So my management technique is when I get a 1M break structure, I break even, I move price to break even. So as you can imagine, that came back, hit me at break even, and it carried on going in my direction. No sweat. So I'm not really a big fan of showing this stuff because it gives people bad ideas. But the next trade was the exact same setup, but the setup came off the 5-second time frame. It was just a market execution. So again, we get our sort of supply, swap the lows, swap the highs, entry here, put your stop a little below, and this was the trade that ran for me. So I managed this one a little bit different. For the sake of this video, we're going to again just say that I took a 1%, I'm going to say I took a 1% risk on, 1% on a $10,000 account. So hypothetically speaking, I believe this was a 14R to run this high. So this was a 15-minute high, 4 hours bearish. It's actually over here. I'm not sure what happened there. So 4 hours currently bearish, and I was just looking to run a 15-minute high. So I managed this a little bit different. And in this case, what it was is at 5R, we took 50% off. So which is again $250 or 2.5%. Pretty simple, right? And what that ends up being is my first partial. The next partial at 10R, I ended up taking 25% because I was only ever planning to run the high. I wasn't planning to stay in the trade because it's only a 14R to start with, so that was another $250 there. The remainder of the 25% volume ran the full 14R. I don't actually know what that is. Let's see, I'm just going to calculate this quick. So it was 11, 4, 10, times 45. So that was an additional $285 in this particular example. So what you have here now is I split up the volume evenly. So what you have here now is a trade that would yield you $785 or 7.85%, which is almost 8%. So this is what I want to show you guys. This is a pro trend. Totally cool to hold this a little bit longer. Now, sometimes a lot of people aren't going to want to hold the full volume. So what do you do in that case? And what I present to people is if you have trouble holding, just do 5R hard TPs. Hard TP at 5R. It's no big deal, you know. In this particular case, there was another 5R here, there was another 5R here, and you could have just followed the momentum. But the point is if you have trouble holding, hit 5Rs consistently. So hit 5Rs consistently. So that's a good way to start training yourself. Another thing I wanted to show you guys, and this doesn't happen every day, but we had a New York session here. I took one of these and I ended up taking a loss. I ended up taking 4R on a day, took a loss, and took a 5R. And these are all with trend. However, they're severely discounted. They're not very well priced trades. So to me, these are lower probability. So at this point, I was just looking for a 5R. So I ended up taking a loss in this area on the 15 seconds when we swept the high and we took these solid buy wicks. I ended up just market executing, re-entering that. That basically gave me my 5R. Now, what I want to show you is the opportunities it presents. So you have 1, 2, 3. Then you have 4 and 5, 6, 7, 8, 9. This is all in one New York session. Now, this is the 30-second time frame. So if you want to know 1 minute for entries, which a lot of you do, there might only be 6 opportunities or something, but you just need to catch one of these. Now, the beauty of this is there's no emotion, there's no nothing. You put your TP in, and it just runs the TP, it closes itself, and you manage the exact same. You know, you get your first one on break structure, you move to break even, and then it runs the target. And then here is a prime example of this trade hitting 5R and reversing, which is exactly what happened to me on Friday. I hit a 5R trade and I just quit trading. It hit 10.1 pips. My TP was 10 pips with a 2 pip stop at 10.1 pips at reverse. So had I held more or wanted more out of the day, it would have, just, if I didn't pay myself anything, it would have just took me out of the market. So a lot of people, they want these big 20, 30, 40 Rs, but the starting point for all that is hitting 5Rs consistently. Once you're hitting these consistently, now you can be like, okay, well, I'm going to leave half volume on to 10R. Or I'm going to shoot for 15R, and in this case, you take 50% at 5R, take another 25% off at 10R, and then you just ultimately break even on the rest, but you don't care because you're always extracting profits. And you can refine the system any which way you want. You can pay yourself every 3R, every 4R. We have a member in our community that took a $2,000 account to $25,000 just using 3R hard TPs, just to show you the power of that. It's a very powerful technique, and basically the whole purpose of this video is whether you want to have a hard TP plan or you want to have a plan where every so many hour you pay yourself. This is how I lay out trades. If I'm going, for the full 25R, it'll be 50%, 10%, 10%, 10%, 10%, or 50%, 20%. At this point, you got 30% volume left, so you just partial out the remainder of your 10% volume over and over. Now, if I was going for, let's say, hypothetically speaking, we'll just say 30R, what I would do is, instead of taking 20% here, I might do 50%, 10%, 10%, 10%, 10%, 10%. And that's kind of how I lay out my trade plan, and that's how I pre-plan. But every stage of the way, I'm paying myself. I hope this video makes sense to some of you guys, and ultimately it helps some of you with trade management techniques. And it's like I said, this has been my message the whole time, to take something off the table every 5R. I think a lot of people got the wrong message that I only take 5R trades. Some days I do. Other days I will hold a trade to 40R, 50R, but I'm not retarded. I'm taking something off the table every step of the way, because nothing in the market's guaranteed. But I promise you, if you have some kind of plan like this in place and you're consistently hitting off those 5, 10 Rs, whatever, and you're consistently taking something out of the market, these numbers compound. They compound fast, and more importantly than that, they build confidence. And once you have confidence, it's you're gonna start doing a lot better. So without dragging this out too much longer, I think I got my point across. Hope this video helps you guys out, and have a really, really good day. Bye, guys.